All right. So thank you so much for coming on with me today. I only found you recently, but and I'm just kind of getting into the world of trying to understand things like gamma profiles with options trading. And your analysis and strategy is pretty amazing to me. So I wanted to speak with you a little bit about it because I think that so many newer traders don't realize what it is. So, could you tell us a little bit about the basic fundamentals and building blocks of what it is you look for?
Yeah, sure. So the do you want me to like go into like the detail behind like why it kind of works, or should I
Yeah,
just go
yeah,
straight
like
in? Yeah, so
why it works and kind of if there's any like what are the basics of it and
yeah.
why do they matter?
Okay, cool. Yeah, so um so I've been interested in like trading options and stuff like that, like once I sort of realized like how much larger the returns were like the just trading commons, right? And I guess like where like I developed the strat from was pretty academic in terms of like foundation. So I spent a bit of time like learning about market makers, and there's quite a few like academic papers on how market maker inventories basically lead to like a positive return, if followed the right way. So from there, I started like looking into like how do you predict like where a market maker's inventory sort of exists, and like where are they hedging their flows, because I guess their whole business is built around like selling options, right? So they
Hmm.
don't care which way it goes. They just want to be able to sell you that option, but then make sure that they mitigate the risk to the downside or to the upside. So I'm learning more and more about this, reading all these papers, and then sort of realizing like, yeah, this can definitely like work as a strat. And that's where I like built the platform and started learning about how they hedge. So when they hedge with respect to delta, um, which is like just the change. Do you want me to go into the Greeks and stuff like that, or should I just
Well, I think that everyone kind
gloss
of
over?
knows the basics of delta, but yeah, I mean delta
Yeah,
is just the rate of change of the options price in relation
yeah,
to the underlying, right?
yeah. So just the delta hedging process, and basically like through the use of like gamma profiles, so the second order derivative of delta, um, and like creating like a gamma notional amount, you can basically create these kind of like levels um, within the underlying, and then use that to create dynamic, like forward-looking support and resistance. And you also know like whether or not the stock is going to be particularly volatile, because if you end up in like a positive gamma environment, it's less volatile, so the market makers hedge against you, against flows effectively, so they suppress volatility. And then in reverse, when it's negative gamma, it's extremely volatile, and you can expect like the huge ranges like we saw sort of last week. And then you can
Hmm.
use that to your advantage, right? So you can like be more aggressive with taking the call or taking the put, because you're going to get that range, which means you'll like generate enough of a swing to get a profit. V when it's positive and you sort of get that really boring kind of choppy kind of periods where you're not really doing anything, like the stock's not moving, indices
Hmm.
aren't moving, and you kind of just lose money to theta.
Oh, okay. And do you have an example of what you're referring to? Maybe if we could do a screen share so we could see what you're talking
Yeah,
about,
sure.
how it correlates with finding the support and resistance levels.
Yeah. Let me grab one up. Let me know when you can see my screen. Don't know
Not
if it's sharing.
yet.
Let me try again. Is it sharing now? No?
Mm, no, not yet. And you
Alright,
click
let me check
the share
settings.
screen.
Yeah, I think it might just be one of those annoying, like, sort of max security things where,
Oh,
right,
okay.
Yeah, where I have to like go through the settings to do it. Let me try it this way.
Okay.
Can it show anything? No.
Mm-mm.
Okay, this is insane. Right, just give me a sec. Um,
Or if you have, if it's not working too, if you have any maybe screenshots you could send me, and then I can just do it through my end too.
let me do that.
Okay.
All right, I'm gonna because I had like a couple open already from before. I've noticed it's done that a couple of times though when I've used Teams and whatnot.
Mm-hmm.
I'm just putting that one up. Right, so this one's spy, and this one's accuse.
Okay. I'm just waiting on it to load for me.
Do you want me to send it like via Twitter?
Yeah, that's fine.
Yeah, I'll just ping it over there.
Do you send it through messages?
Yeah, I'm just sending it through messages right now.
Oh, okay.
There should be another one loading.
There goes one.
Actually, the cues is a really good one to go through. Actually, as an example.
Okay. Just give me 1 second.
Yeah, we'll just go through that one. Cool. Did you get those?
1 second. There we go. Okay. Can you see
All right.
mine?
Stuff. Yeah, I can see yours.
Okay. All right. So here
All right.
we're looking at the QQQ one. Okay. So what am I looking at here?
Yeah. So this is just the dashboard that I like created. This is sort of like the first iteration. I don't really look at the scorecards. I think I just left that for like end users to just have like a quick view of like where calls are by open interest on the left. So like most active call, most active put, most active
Mm-hmm.
volume, call and put as well. But the main like key parts are like the delta profile and the gamma profile. Um, so I usually post like commentary in the morning, and like this is like part of my routine, just like for my own kind of like planning and understanding like where I'm going to be like playing things ahead of time. And one thing that kind of stands out like from the beginning, so if you look at the chart on the right, when you look at gamma profiles,
Mm-hmm.
you've probably heard this a bunch of times in spaces. Um, you have like key gamma areas. So like I don't want people to like boil down and get like bogged down in like sort of like the complexity of it all. Just see like long line, and long line means
It
support or
means a lot.
resistance, basically.
Okay.
Yeah. So like in this case, it's like negative gamma, right? So that would be a put wall, and a put wall or a call wall usually act as like very strong areas of support or resistance, right? So like the way
Mm-hmm.
I sort of explain it in the past is too many puts gives you a floor and too many calls give you a ceiling.
Mm-hmm.
So we've had the same situation here where we've had so many puts, and you can see that from the profile, everything is negative. 350 just acted as a floor.
Mm-hmm.
So I'm watching like the Qs trade today, and I'm waiting to see if like the Qs are going to break 350 like or not. During like sort of the pre-market session, they didn't like it went down, tried to test and bounced off like pretty violently. So that was like my first okay, like this is definitely like a place that I'm expecting to not break.
Mm-hmm.
And especially when you see the amount. So you can see like at the bottom like the amount of gamma notional that was there. It's over like
Mm-hmm.
120 mil negative. You wouldn't know like I guess you wouldn't have context if it was the first time you saw it, but like over time, like as you keep using the tool, you begin to like have a relative understanding of like what is a large amount and what isn't. But I mean, just for like the layperson, 100 plus mil should be like quite a lot, even if it is just the indices.
Mm-hmm.
Um, so like using that, you then say, okay, I'm going to take some calls from there, and like if you like watched stock action or the indices action like throughout the day, after that bounce, it went all the way back up to like 385. Tried and tested 380 again, but only went down to like 382, and then from there went and like ripped all the way up. But
Mm-hmm.
that's the part that people don't understand. It's like, well, why is it ripping if we've got so many puts over here, right? It doesn't make any sense. But that's where like the hedging aspect comes into it. So
Mm-hmm.
a market maker will sell shares as they sell puts, right?
Right.
Uh, and
In order to
that's
provide
that's
liquidity for the position, right? For those who aren't familiar with what that, like, why they do that.
So just going back like to what we were talking about before with like their business being selling risk premia, i.e. just the option, right?
Mm-hmm.
They just want to they just want to make sure that they're risk free in their position. So if I'm giving you a put, I'm negative, I'm essentially negative delta, right?
Right.
And then what I want to do is I want to sell to make sure that if the stock or the indices is going down, then I need to like not have any risk going downward, right? Because otherwise, if I've just got a put, then I naturally have that risk if I've sold that to you. So if I'm
Right.
selling as it's going down, I'm automatically kind of profiting at the same time.
And you said, I'm sorry, I interrupted you. You were explaining
Yeah,
why it bounces from there if there's so many puts.
yeah. So it's a psychological thing, as like one key aspect of it. Because like if you think about it, like say you're in some puts, maybe you've taken some like once you've been in our spaces, uh, and like you're getting closer and closer to the strike. Like you're not gonna, unless you're like Wall Street bets kind of diamond hands type guy or girl, you're not just gonna like hold it all the way through, right? So you're
Mm-hmm.
gonna maybe take like maybe you've taken 10 or whatever, you're gonna take out like five as you're getting close to the money, and then like sell those off. And as you've sold those off, then naturally the market makers no longer need to hedge with respect to those puts that they've sold you. So then they buy back, and as they buy back, you get these bounces, and it works both ways. Like whether you're going for a call position or a put position, um, and
Mm-hmm.
then like that sort of confuses people because it's sort of signals like, well, why the hell is it like coming off so hard, sort of thing. That's like one key aspect of it, and then the other part is just um, the effect of the market makers, like as they're hedging as you get closer and closer to it. So as you're like in that area, maybe there are other puts or calls being bought in the other direction. So as that's happening, then they are hedging in a dynamic fashion with respect to other positions, because naturally when you get lower, people start trying to buy the dip and blah blah blah.
Mm-hmm.
So then you end up with this situation where you're going in the reverse direction as well. That's essentially what happens.
And is that similar to what happens in the gamma squeezes, quote unquote? Because I know I was in the Twitter space with you guys. I think it was last week, and
Yeah,
we were talking about Hood, and it had a
yeah,
lot of negative gamma, and then no short. No shares available to short. So is that kind of
yeah.
what we see there too? Is that accumulation like in a certain strike?
Yeah. That was literally exactly the same thing. Yeah, so that
Okay.
was a perfect setup because there were so many puts in there. High short interest as well. So it was like a mixture of both, like high short flow, and at the same time the gamma squeeze at the same time.
And I just pulled up the other one that you sent me for SPY.
Yeah,
So I'm seeing here we have, you know, long purple lines on both sides. So
yeah,
what is this saying? Like it's basically stuck between the two strikes?
yeah. So you sort of have so you sort of have like an area where like just between the two, like one's net negative and then just above that it's net positive, And when you end up with a situation like that, you kind of have like a pinning effect. So
Okay.
I don't know if I'm like right or wrong in this situation because I can't actually see it completely, but I'm assuming, I think I'm right. Like we kind of actually ended in that same position on market close, there or thereabouts. I think we ended around like 4490 or whatever.
Mm-hmm.
Um, so that would be an area that would basically you'd consider to be pinned effectively because you've got like a dynamic effect like coming from the negative side, but then also from the positive side. Um, so there was that. But like one of the key parts that I noticed, and it's not in this screenshot, it's like the vol surface stuff that I've got on the dashboard as well.
Mm-hmm.
Um, and that's like in relation to and maybe I can send you a screenshot of that
Yeah, if you
as
could,
well.
that would be
That would
great.
be
It's a lot
probably
easier to see it.
yeah, see it
Yeah.
visually, yeah.
Mm-hmm.
I'll, I'll do the same thing on the cues actually. Um, but as I'm getting it up.
So when it's pinned between the two strike prices, essentially, does that usually correlate with more of the channel days where it's just kind of trading between a channel, and then the trend
Yeah,
days when it just has one side?
yeah, yeah, basically that. That's
Okay.
exactly it. All right. This is going to look slightly confusing initially, but should work. All right, let me just ping this over.
I think it just came through. Okay. All right. Yes. What is this
Cool.
3D model that we're looking at?
Yeah, so uh yeah, so it's a vol surface
Uh-huh.
model. So usually they look a lot flatter, but in this case, not so much. So like basically like the higher the color, the greater the IV. On the left you've sort of got the expiries, and on the bottom you've got the strikes, right? But one thing that I noticed like in the morning, you can't see it so much now because like my models are all like dynamic. So like as soon as like someone hits request, like they get the information like as of that particular moment.
Oh,
But in
so
the
you don't
morning,
have
what
to
you saw
wait
is
for the close or the open.
yeah. So
Okay.
that's kind of like that was like part of like something that I wanted to like make sure was a thing. So like you just get refresh data straight away.
Mm-hmm.
Um, on the so they call it a skew. So like usually, like when you buy too many puts, then you have a skew towards the puts, and you can kind of see that on the cues still, where there's a bit of a lift. So starting from the left, where it's a bit darker, going up to the right, which is a bit lighter in purple, there's greater volatility on the put side, right? So like the
Mm-hmm.
lower the strike, the greater the IV, and that's favorable for vol traders in particular who want to take out an option because naturally like prices follow like is based on IV, right? So if puts are really expensive, then naturally they're not going to want to trade puts as much because they know that they're paying more relative to what they should be. So in this
Mm-hmm.
case, calls were favored. So if you knew that calls were favored ahead of time, and you also knew that the gamma profile was sort of saying 350 is going to be the floor, then you combine the
Mm-hmm.
two together, and it's like it makes it like a higher risk reward strategy for you to take those calls. And if you took those calls at like 360 on the Qs, for example, which is like one of the ones that I took, you'd make like 300% like within like a couple of hours, like just based off of like the Qs are like not even it's not even underlying stock. It's literally the indices, which is kind of nuts. Um,
Right.
so yeah,
And
that's basically
so
it.
so with this data that you're looking at,
Yeah,
obviously it's different than looking at the actual underlying chart. Do you
yeah.
often see like a correlation between the like finding support and resistance on the chart, or supply and demand? It usually correlates with this data as well, or is this kind of like coming first?
Uh, yeah. So you do see, to be fair, you do see like you see a confluence. So like seeing the call premiums being cheaper when I went
Hmm.
onto the queues, and you'll see that on the dashboard. When you go back to the queues and you like take a look at the volume for calls, like they were drastically higher than you would have expected, given that we were in a completely like negative gamma environment. So as soon as I like flipped the dashboard open, like sort of like market open, maybe about half an hour later, I just saw like a huge like number of calls being bought at like various strikes, like out of the money. It's all like 360, 355, and so on. And like that kind of like strengthens your theory in your head that okay, well the premiums are cheap, great, so I'm getting a bet like more bang for my buck sort of thing.
Right.
At the same time, I'm also seeing higher calls being bought, and I know that I'm fairly confident that the floor is going to be put in because if you run like stats, which I've done in the past, on like put walls and call walls, there's a much lower probability that they're going to break depending on how large they are, and that was one of the largest that we've seen thus far as well. So you combine it all together, and even though it seems like quite a few data points, like once you get in the like I guess like the muscle memory, as it were, of
Hmm.
doing it, it gives you like more conviction because like you can draw like technicals and stuff like that, and then sometimes you're sort of just like like how do I know this is even gonna work? Do you know what I mean?
Yeah. Yeah, no, definitely. That's why it's
Um,
it's such an interesting like tool for analysis. Um, Especially when you're trying to like, well, actually I guess this would be more of a question for you. Is this data usually geared more towards like a intraday position, or is it also useful for like swing trading options? Like how far out do you want to be looking for this?
yeah, so I usually would say like anything like more than 2 weeks, probably not.
Okay.
Um, because I find like monthly. And I mean, you can take longer duration just to like reduce your risk, right? Because like you don't
Hmm.
want to bear the volatility, but like it will give you a decent idea of like where positioning is. Like say for 2 weeks out, let's say you're taking like Tesla or whatever, like because it's weeklies, the model's always set to like a T. So what's the current expiry, and then the next expiry after sort of like the T plus one, right?
Hmm.
Um, and then that way you get an idea of like okay, well what's the difference between the two, and then that in itself will give you an idea of like okay, well should I be taking it here? Like where do I need to start positioning myself? And like where can I expect it to kind of go? So
Yeah.
yeah, 2-ish sort of weeks is usually like where I go with it. But like it's also like great for futures in particular, like the MNQ, NQ, MES, ES.
Hmm. And okay, so we went through what the net gamma profile is. What am I looking at with the net delta profile, and how do those two go together?
Yeah, so uh, gamma ultimately affects delta, right? And
Hmm.
um, without like without like complicating it too much, like the main thing that you care about altogether is delta. But before I kind of like go into the profile, like, I just want to like pinpoint one key thing because I feel like so many people read option chains, look at delta, and they understand the meaning, but they don't
Right.
actually understand what that little number means. So like if you've got a 0.3 delta on an option chain, that's the market maker telling you that there's a 30% probability of your option hitting,
Hmm.
but no one knows that. Like
Which is why the
from what I
sellers
understand of collective risk.
always go ahead.
Yeah. No, exactly. Yeah, exactly. Yeah, exactly what you're saying. Like, which is why the sellers like pretty much always win because the probability is kind of
Hmm.
stacked against you, right? Yeah. So, um, that that's the that's the key part that I kind of want to like drive home first. But then when you look at the delta profile, the numbers are slightly lower, but that's because it's just focusing on like the total number of shares market makers would be hedging in response.
Hmm.
So, um, this kind of shows exactly like it kind of shows the picture that I was sort of describing with the gamma profile. So you combine the two together, and if you look like further up to the top, you can see that's all kind of negative, right, on the top
Hmm.
left, and that kind of corresponds with the action that we saw today, where we had all of this like price action moving us higher and higher on the queues, everyone's looking at job numbers during the day. Like you probably heard about the job reports like coming out and
All
what
the
people have got in the
revisions.
past. Yeah, exactly. So everyone's thinking all the revisions like great for the economy. That means the economy's on fire. Naturally, that means that Fed is more likely to rate hike, and so that should be bearish stocks, right? But
Hmm.
they're ignoring the huge like elephant in the room, which is the option market, and this is basically saying the complete opposite to what everyone else is thinking. So loads of people buying puts, still trying to short the whole. Meanwhile, market makers are literally buying back non-stop, and it's just continually driving things higher. And everyone's just like, well, I don't understand what the hell's going on here. That is what the delta profile is essentially showing.
Okay. So when you have the on the negative side is on the left here, and then on the positive side, it's showing you like their net position after their hedging, correct?
Yeah,
Okay.
exactly. So they'd be buying back, and it kind of makes sense, right? So it goes back to
Hmm.
like the whole, if I'm selling you a bunch of, if I'm essentially like negative gamma, I then also need to go buy back all of this stuff that I've got off of you, like all the stocks or the underlying being the futures or whatever, after I've sold you those puts and so on. And if I've sold you,
Okay.
uh, yeah,
No, I'm just trying to make sure that we're explaining it because I feel like
one of
when you
us,
first look at this, when at least like for
yeah,
me, when I first looked at this, I was like, oh man, Chinese.
yeah,
Because it can be really complicated when you're looking at it and then you see the different numbers. But yeah, I really like how you put it into very simple bars, so you don't even necessarily have to have that much of an in-depth understanding of like what it means to be at that like the calculation for it. It's a lot
yeah,
easier to see it visually.
yeah. So yeah, just and you can be the gauge of this, I guess. So like at the top, they would be buying back because it's negative, and at the bottom they would be selling. So that's where you get like that kind of reflexive action, right? Like as you're going lower, you're seeing more selling going into it. That's
Hmm.
literally explaining the whole hedging flow dynamic.
Right. And when you when you see, because I noticed that there was a change from QQQ and I believe Apple as well. From yesterday, they were in I think it was a positive gamma environment and then switched to negative. How
Yeah,
how does that happen so quickly? It's just switching position sides essentially. Like kind of how does that flip in the
yeah.
same
So
expiration?
if I wish I had like a whiteboard and I could just kind of just show it, but like if you
Yeah.
just imagine like x-axis is like the strike, and then on the left you've just got like gamma amount, um, and you just view like a bit of a curve, right? So starting from the bottom is kind of flat, and then it like, starts to form a bell shape, has a peak, then draws down and goes right, and it's sort of like I guess equidistant, so it's a symmetrical kind of bell. Um, that's your gamma curve. So as you're getting closer to being in the money, your gamma's increasing. And the same thing would happen with all of the calls and the puts. So if you're moving
Right.
away from a particular area, like say you're going further down, then naturally the gamma for say a put would start increasing, right? But then also at the same
Hmm.
time, if more people are buying those puts, then naturally the gamma would also increase in that particular direction. What also helps the puts is if I'm going all the way to say 180, or I think in this case it was no, I think it was 180, right? Was it one? It was 170, and then it flipped back down. Um,
Hey, can you hear
as I'm
me?
going to that level,
Yeah.
people are selling those
Let
calls,
me make
which
sure. I
then
don't
fuels
know
the
what
downside.
happened. Let me
People
make
also
sure
buying
it's
puts at the same particular point because
still
they're trying to
connected.
play the resistance. At which point, if you go down low enough, you start increasing the negative gamma, and then you start reaching puts where they're in the money, where gamma is essentially at its highest, and then the process sort of repeats if people keep buying puts like further and further down. So you get like this kind of ladder effect.
Okay. I think that it had a glitch, but I'll have to just upload the stream over it. All right. So if we go back to what we're looking at, QQQ. Okay. Okay. So once
Okay.
you were talking about the gamma curve, and once you, I guess, approach the strike and then go over it, it starts to go back down again, right? Which is that
You're
like
looking at
kind
Apple.
of what we see with a short squeeze when finally it's done for?
Yeah. Uh, yeah, sort of. So I mean, like yeah, yeah, kind of.
Mm-hmm.
Uh,
Yeah, I just pulled it
so
up again.
with with the flipping of gamma going from like positive to negative, usually what happens is like, so you saw the profile before, right? With the Qs, like eh, it's not as, yeah, it's not as good of an example because like you don't have like a confluence, like a flip between positive and negative. But if you were to say like the delta profile was the gamma profile, that would be an example, except you'd flip it because you would see positive on the top right and then the same negative on the bottom left. And that would be a flipping from being positive gamma to negative gamma.
Sure.
And you sort
Yeah.
of end up in this like situation like right in between. And like an example of that would have been AMZN, which I can show
No
you if you
worries.
want. I
We
can take a
seem to be
screenshot of that.
having
That would help.
technical issues, but
Um, yeah, sorry I can't share my
no
screen right now.
worries.
But every time I click it, it
So
doesn't let me do anything.
I know
Just
you were saying like the different levels,
doesn't
but
let me.
so once you
Technical
go over that
difficulties here.
strike, is that
Yeah.
kind of what's referred to as the gamma clearing, essentially? Okay.
Yeah, yeah. Effectively, yeah. So like if you go over, I'm trying to think of an example. If you were to like go above a certain area on like the negative side, so like Upstart today as an example, like that had like a negative gamma level at around 95, I think, if I remember correctly. And then as it goes above that, it's cleared that particular level.
Mm-hmm.
And as a result, like all the puts that are there are starting to unwind. Like as you're getting closer to the money anyway,
Oh, really?
it's already unwinding because market makers no longer need to hedge with respect to that particular position. So that, yeah, that's basically an example. I've just looked at
Okay.
AMZN and that's completely
That's
positive
actually a
now as
really
well
good example to show
because
that
it's
like
completely
once
changed
once
from,
it
yeah,
clears
it
out
completely
how
changed
it
from like
how it
last night.
switches.
I do actually have, yeah, no, I've got screenshots from before, so I'll just send that instead. One sec. Yeah. Because I take these, I usually end up taking these like a bunch of times
Let's
before. I
see.
think this one is AMZN. Let me check. Yeah, it is. Perfect. All right, cool.
Not yet. I just have the fall
You
profile.
should get a picture in your DM.
Okay. All right. So now we're looking at Amazon, and this was data from last night.
Let's upload it again. Yeah, there you go.
Oh, okay.
Yeah, so just before earnings, basically, because I had a bunch of people asking me like, where am I going? Where am I going? Like, what am I doing? Sort of thing. Uh, and I was just like running them through that and kind of explaining that positioning wise,
Mm-hmm.
because no one actually knew like which way it was going to go. Like after the Facebook sort of issue and their earnings like really like taking the tumble,
Mm-hmm.
people weren't sure if like AMZN was going to do the same thing. And then when you see the market going down as well, plus VIX spiking, people start thinking the worst, and they're like, oh, okay, AMZN's definitely gonna like miss too. And then
Mm-hmm.
it kind of took everyone by surprise. So yeah, this is an example, right? So you've got a negative like gamma profile below kind of 3,000, and then above that, it's all positive. And this would be like this would essentially like be a view of like where you'd flip from being extremely negative, which is what we were, back to being positive, and that kind of contributed to the 16% you saw post market, because like they had earnings,
Mm-hmm.
so they had the catalyst, but then at the same time you had all of these puts that were there from like 2,950, 990 downward to sort of around 2,600 or whatever, and they were pretty large levels as well. And as the price that shoots up, naturally all of that like starts getting cleared. Market makers start buying. As they continue to buy, they drive it up even higher. All of these other puts start unwinding even more, and then you reach a point where now you're in positive gamma. People also have calls as well at the same time.
Mm-hmm.
So then there's like a whole effect, like sort of happening all at the same time in one fell swoop.
Mm-hmm.
But then you also have to take into account just the natural
and
so people who are short.
I know with
so
earnings, a
the
lot of
margin call
people
stop losses
who try to
and
trade
that adds
earnings
to the effect.
announcements will do one of those, spreads that are on either side. So do you ever use this data to kind of like choose your spread strikes and do the same thing? Or do you just stay away from earnings? Because I tend to kind of just stay away from earnings unless it's a lottery pick. Mm-hmm.
Yeah, no,
Mm-hmm.
you definitely could, to be fair. So there's like you can see like where the kind of ranges are with that gamma profile in particular. And I know some people did play those spreads and they like did them
Mm-hmm.
successfully. But you always run the risk, right? Like an earnings is an earnings. Market makers will give you an idea of where they think the range is. So like if you take that at the money strike, add
Mm-hmm.
both the put and the call together, that the cost of that is telling you how much a market maker thinks the strike is going to, not the strike, sorry, the underlying is going to move by, right? But like in this kind of situation, like it moved like what, nearly 300 something dollars, like in the space of like a couple of minutes, and like, I don't think many people were thinking that at all. So yeah, in a like a super negative gamma environment, it's probably not a great idea to do it, just because you may like really underestimate how big the swing is. And a lot of the greats who've traded
That's a good point.
Victor
Yeah.
Niederhofer,
Yeah, no, that's a very
like
good
blew up
point.
their accounts
Options are
selling
account
options. So
killers.
if they've done it, then
How
like
how
the
oh yeah.
chances are that
How
it is also likely to
how
happen to
long
you.
ago did you start
Yeah.
creating this tool, and like
So
why did you create it? What were you kind of looking at
yeah, especially
before
when you're
and
selling
it just
premiums.
wasn't meeting like what you needed to see?
Yeah. So
Mhm.
there's a lot of like tools out there. You've got like all the flow tools and all of the other kind of vol platforms. But and I literally tried every single one, so I must have spent a couple of grand just like buying each one like every month. And then I sort of realized that I was like, yeah, none of this is like what I want. It doesn't maybe fit my style or whatever. So I like went through like Unusual Wells, Cheddar Flow, like all of those. Then the vol stuff, so like Squeeze and whatnot. But like one of the things that kind of like annoyed me was that like with the
Mhm.
vol stuff, which made more sense to me, was the models are only updated like in the morning, so you're kind of stuck after. You don't know when things are going to switch, and naturally like gamma profiles
Mhm.
always change over time. And then there were just other things that were like missing. So like small things that I would find in another platform, I couldn't find in that particular platform because it just wasn't
Mhm.
available. That wasn't what they did. So then I was like, okay, like I come from a data science background. I know how to code. I know how to like bring data together, make my own models and stuff anyway. I just didn't have the time. And then like I set out about probably back in August last year, where I started like just figuring out like what I wanted to do, what I wanted to make, did all the research, stuff like that, and then eventually, like as I like had all that kind of done, then the coding of it didn't take as long to do. So yeah, that was the reason why I created
Mm-hmm.
the platform.
And if you, I don't know with your site, since we weren't able to do the screen share, but do you have resources on your website where people can go and learn what it is that they're looking at? Or is there any resources that maybe you'd recommend to learn a little bit more and try to understand everything?
Yeah, yeah, no, there is. I've got a couple of videos that are going to be coming out, so they will go onto like the main site, which I'm porting over to hopefully
Okay.
this weekend, which will just have everything housed together. Um, and that will have like a couple of videos sort of explaining delta hedging, but in like the least lecturable way
Yeah.
possible, I guess. Um, and then yeah, because yeah, it's pretty like boring stuff, like sort of understanding it, but yeah, just trying to like make it as simple as possible, like explain like I'm five type
Right.
situation. And then I will start pretty soon. I've actually got a call this Saturday, where I'll be doing a sort of run through the dashboard. You're free to join if you want to learn a little bit more about it again, because I know that you're in the space, but you can't see stuff, so it's a bit
Right.
difficult to like go through at the same time. Where I'll go through a couple of cases, like sort of where the market was last week, where I think it's going this week, and then kind of like take some use cases. So like go through a couple of tickets that people want to go through, and then just take questions and like answer them, so they can kind of start understanding like what the tool does and like how market
Okay.
microstructure kind of
And
works.
the link for that you're going to be posting on your Twitter. If you want to go ahead and plug your
Yeah, that'll
website
be
and
on my
plug
Twitter.
your Twitter profile so everyone can check it out.
Yeah, yeah. So it's Vexly on Twitter, but with two X's, not the one. And like the link to my website's in the bio. There's free weekly commentary on the website. So even if you like don't want to like buy anything, like I just think it's useful for people to like learn about
Mm-hmm.
this side of the market, because it's been a bit more obscure, but slowly gaining a bit more notoriety. And then yeah, if you sub, you get the daily commentary, plus the gamma results, and then the dashboard, which
And
will
you're doing
follow as
the
well.
call go through for
Tom-
tomorrow, you said?
yeah, tomorrow at the same time, so it'd be 5 p.m. EST, and that'll be on a Discord.
Okay. All right. Awesome. Looking forward to it. Thank you so much for coming on with me. Sorry we both had technical difficulties, so I'll upload the recording on top of the live stream, so that you'll have that, and I'll send you a link to it.
Okay, cool. Cheers. It was great talking to you.
All right.
All right,
Thanks. You too. Have a good night.
you too. Take care. Bye.
Want more Trader Babes? Subscribe now and connect with us on social media for exclusive content and access you won't find anywhere else. And we'll see you right here on the next unforgettable episode of Trader Babes.